Albert Einstein famously called compound interest the eighth wonder of the world. In trading, this wonder can be your secret weapon for growing a small account into a much larger one over time. Instead of chasing one big win, savvy traders focus on steady compounding gains. In this video, I'm going to explain why compound interest or compounding is so important in trading. I'll show how following a weekly compounding plan can keep you on track with clear goals. And I'll explain what to do if you fall short or have a losing week. The tone here is educational and motivational. I want you to understand the math and the mindset behind compounding and feel inspired to implement it realistically in your own trading journey. Compound interest basically means earning interest on interest, or profits on top of profits. With compounding, money grows at an accelerated rate because each new profit builds on a larger base than before. In a bank account, interest gets added to your principal, and then you earn interest on the new total balance. In trading, the concept works similarly. You reinvest your trading profits so that your account balance increases, and then any new gains are a little bigger because they're calculated on a larger account size. This is why compounding is often called the magic of small wins. Those small wins can add up fast when you consistently reinvest them. To put it simply, compounding in trading means your profits start generating their own profits. Instead of withdrawing your gains every week or month, you keep them in your account. Then you use that larger balance to potentially make more on the next trade. It's like a snowball rolling downhill. At first it's small, but it keeps rolling and it picks up more snow as it grows exponentially. As one trading guy puts it, compound trading involves reinvesting profits to achieve exponential financial growth. The greater the frequency of compounding, weekly or monthly, the more pronounced the growth can become over time. Let's dive into why compounding is so powerful, especially when you think in terms of weekly growth. Even moderately ambitious weekly gains can lead to massive results over time. For instance, if you grow a $1,000 trading account by 10% each week, in 2 years, it could be well over $1.5 million. That's the raw power of math and time working together. Another example, start with $500 and aim for 10% profit each week. After 1 year, you'd have about $13,000, and after 2 years, roughly $350,000. These numbers are staggering considering how small the weekly goals are. It underscores a key point though. You don't need to hit home runs. You just need consistent singles. Small consistent games plus time equals exponential growth. Now you might be thinking, 10% each week sounds incredible, but is it realistic? It's certainly challenging. Achieving a high return week after week will require skill, discipline, and favorable market conditions. In fact, even a smaller goal can be life-changing. Growing an account by 8% per week, which is around 35% per month, results in over 1,400% annual growth. That's turning a modest account into something truly significant in just a year. One trading writer puts it plainly, that's not a dream, it's math. The real takeaway is that compound interest makes time and consistency your allies. Instead of trying to double your account in a month and likely taking reckless risks, you focus on steady weekly or monthly percentage gains. Over time, the compounding effect does the heavy lifting to your account growth. As one source noted, most people overestimate what they can do in a week and underestimate what they can do in a year. With a compounding mindset, a year of steady growth could change your financial future. Having a compounding plan means that you have a clear growth target for each period, like each week, and stick to a consistent strategy to achieve it. This gives you a concrete goal to work towards every week. It's motivating and keeps you disciplined. Instead of vaguely hoping for profits, you might decide, I aim to grow my account by 10% this week. That weekly goal focuses your trading. You're not just trading for trading's sake. You have a plan. When setting these goals, be realistic and conservative. Ask yourself, what percentage gain could I reasonably achieve on average given my strategy and the market I trade? Maybe it's 8% per week or 10% or perhaps 5% per month for more conservative traders. It's crucial to pick up a target you can hit consistently. If you aim too high, like trying to make 20% every single week, you might end up taking bad trades or just chase that number. Experienced traders warn that if you set that bar too high, you'll be tempted to break your rules. To avoid that, choose a growth rate that you're comfortable with. Even 8 to 10% a week can be incredibly powerful when compounded. Once you have a target, map it out. Use a compounding calculator or spreadsheet to project your account balance week by week. If you hit, say, 10% growth per week, this becomes your roadmap. For example, start with $2,000. Aim for 10% weekly growth. In 52 weeks, it projects to around $140,000. In 104 weeks, over $10 million. At least in theory. Seeing the potential outcomes can be motivating. It also trains you to think in terms of percentages, not just dollar amounts. Your focus shifts to process, executing your strategy to hit that weekly percent rather than outcome, making an X dollar amount per trade. Discipline and risk management are integral to any compounding plan. A common recommendation is to risk only a small fixed percentage of your account per trade, often 1 to 2%. As your account grows, your position sizes grow, but the risk relative to your account stays low. This way, no single loss will derail your plan. Remember, compounding is a marathon, not a sprint. The plan keeps you focused on steady progress, not on gambling your account on 1 or 2 big bets. Now let's talk realism though. Not every week will be a winning week. In trading, losses are a part of the game. So what happens to your compounding plan if you fall short on your weekly goal, or worse, if you have a big losing week? First, don't panic and don't abandon the plan. One of the biggest mistakes traders make is losing faith and deviating from their strategy after a setback. Remember that a compounding plan is a long-term roadmap. There will be detours and speed bumps, but you can still reach the destination with patience. If you have a losing week, the most important thing is to keep the loss small. This is why we emphasize risking only a small percentage per trade. For example, if you risk 1% per trade and have a bad week, your account might only be down a few percent. It's not fun, but it's manageable. One bad week won't wipe out months of progress if your risk is under control. In the following week, you simply continue with the plan using your new account balance. Do not try to revenge trade or double your risk to make back the lost ground. That's how small losses turn into big ones. A good plan accounts for the fact that some weeks will be down. You might even build a bit of buffer or assume you'll only hit your weekly target 3 out of 4 weeks on average. If you're behind your goal 1 week, stay calm. Stick to your proven setups and rules the next week rather than swinging for a home run. Revenge trades and fear of missing out trades will kill your compounding plan. Avoid that emotional trap. Here are a few tips for managing a bad week within your compounding framework. Keep perspective. Zoom out to the monthly view. You can have a losing week and have a winning month, or a losing month but still have a profitable year. One bad patch doesn't define your success. You want to review and learn. A losing week is a good time to review your trades. Did you follow your plan and it just didn't work out, or did you break some rules? If you followed your plan, then chalk it up to normal variability. If you deviated, identify why and address it. Keeping a trading journal can help analyze this. Adjust it if needed. If you consistently can't hit your weekly goal, it may be a sign that the target is too high. You can adjust your plan. Better to aim a bit lower than to quit entirely. Next, you want to stay the course. If the loss was within normal expectations, simply continue with the plan. Don't suddenly increase trade sizes to catch up. And then you want to trust the process. Compounding is often called a marathon, not a sprint, and that cannot be overstated. You also need patience. In the first few weeks or months of following a compounding plan, the growth might seem slow. This is where many people lose faith. They quit too early because the magic isn't obvious yet. But compounding is most powerful over longer periods. The real acceleration often kicks in after many months of consistent gains. The challenge is sticking around and staying disciplined until you reach that inflection point. It helps to remind yourself that slow and steady growth beats sporadic windfalls. A trader aiming for 50% gains in a month might get lucky once, but it's usually not sustainable. On the other hand, a trader who averages 8 to 10% per week and does it consistently will far outperform most wild gamblers over time. The compounding trader sleeps easy at night because they're not betting the farm on any given day. They have a plan and a cushion. This approach is calm and controlled, focused on steady growth and capital preservation. Also, mindset is key. You have to treat your trading like a business. Track your results, measure your performance against your weekly or monthly goals, and hold yourself accountable. If you treat it professionally, you're more likely to get professional results. Celebrate the process of following your plan, not just the profits. A week where you stuck to your rules but ended negative is still a kind of success. It means you're executing correctly, and the losses are just an expense in doing business. Over time, the edge in your strategy should play out in your favor, as long as you keep your head straight. Compounding rewards those who are committed for the long haul, not those looking for shortcuts. If you stay disciplined, manage risk wisely, and keep your emotions in check, you give yourself a chance to turn small gains into substantial wealth. Most traders who fail aren't beaten by the market. They're beaten by their own impatience or lack of discipline. By embracing the compounding philosophy, you're essentially saying, I'm in this for the consistent growth, not the quick gambles. That mindset shift can make all the difference in your trading career. In conclusion, compound interest in trading is incredibly powerful. It's a growth engine that can take you from a small account to a large one if you combine it with realistic goals, solid strategy, and discipline. Following a compounding plan gives you a structured weekly goal, keeping you focused and motivated. We've seen that even a few percent gain a week when compounded can potentially lead to triple-digit annual returns. But we've also emphasized being realistic. Not every week will hit the target, and that's okay. What matters is the overall upward trajectory and sticking to the risk management rules that keep you in the game. If you stumble one week, learn from it and keep going. The journey is long, and what counts is where you end up after many weeks and months. I hope you're feeling both educated and inspired to harness the power of compounding in your own trading. To help you get started, I'm offering a free trading compounding plan that you can use as a template for your journey. It's available via the link in my description. This plan will give you a ready-made roadmap of weekly goals and a framework to track your progress. Remember, the goal isn't to get rich overnight. It's to develop a sustainable path to growth. With the right compounding plan and mindset, compound interest can be your best friend in trading. Thank you guys for watching. If you found value in this, please give it a thumbs up and subscribe for more content. And now go out there and make compounding work for you. Small steps, big results over time. Happy trading.